So as we've seen in the last couple months and over the year, the U.S. has continued to have low unemployment numbers, and inflation has seemed to be falling. However, despite the uptick in inflation last month, many leading economists are still predicting a soft landing to the U.S. economy. Do you see it this way?
Short answer is not. I don't see a very soft landing. The interesting part here is that a lot of experts and economists are changing their mind quite frequently. So at the beginning of the year, we have seen a lot of economists coming out saying, "Oh, there will be a hard landing." Then inflation was coming down, and at the same time, unemployment rates stayed low. So there was a change in their perspective. But I think that there is still some danger or some risk in the economies that there will be a hard landing, because especially with the unemployment rate, it is a lagging indicator. And yes, there is a low employment rate currently, but what we also see is that there are a lot of people in the U.S. working 2 or 3 jobs to afford a living.
Interesting. So I guess what are the economists who say there's going to be a soft landing? What are they looking at, and I guess what are you looking at that speaks against it differently as far as numbers or data?
Uh, from what I see, I get the feeling that a lot of economists are backward looking. So they're looking what has been in the past, and they're not really making any expectations or have not really any expectations for what is coming in the future that much. So, for example, the the corporate gains, for example, they are still very high, or they were still very high from the last year, but there was a lot of money in the system, especially coming from the government and from the central banks. But now the money, the amount of money within the economy is decreasing. So there is a liquidity measure, it's called M2, which measures how much liquidity is in the system. And it is defined or decided by the central banks how much liquidity should be out there. So they are reducing this liquidity measure. So this will have an impact on the economy and also on the companies, obviously, where consumer confidence will decrease over time, and consumers are focusing more on saving more money because the time of free money is over.
What can investors do to prepare for any case, but whether it's a soft landing for the economy or a hard landing, what can investors do to set themselves up to prepare themselves to go through this event or I guess economic environment?
It's a good question. I would say the most important point here is to don't lose the big picture. I mean, there is volatility in the markets, there is volatility in an economic circle, so there are up and downs. And I said at the beginning that I'm not believing that there will be a soft landing, but I'm not that convinced that it will be a very hard landing. I I tend to say it will be closer to a hard landing to a soft landing. But since it is to some extent also still expected from investors and professionals, I don't expect that like the surprising effect or the surprise effect isn't that big. When it comes to the investments, it stays the same as it has in the past. Do your due diligence, decide for yourself what is a fair price you're willing to pay for a specific company, and whether this company will be able or capable to generate value for the investors in the long term. And if you can answer the questions or can answer these questions with yes, it will still be a good investment. And then last but not least, your time horizon is very important. I mean, if you need the money in about 1 year, then the risk is pretty high that you won't get back what you invested or yeah, what you put into the markets. But if you have a longer term horizon and if you see that there is more cash coming in period of time which you can invest and where you can buy probably more of the stocks you decided to put into your portfolio, you can level out the volatility in the purchase price.